Ladies and gentlemen, this is Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus yen, so let's get started. Looking at the hourly chart, what do we notice? Well, we notice the low prices in trading here today. Found support buyers near the 100-hour moving average. Found support buyers near the 100-hour moving average. So guess what? The 100-hour moving average is going to be a level that we're going to be watched from a technical perspective. As price can stay above that level, the bias remains more to the upside. Price moves below that level, then it's a different story. The bias would shift in the short term to the downside. Now in the long term, this is the way that the price has been going. So there'd be more room to roam to the downside or probing to the downside that we'd want to see happen to increase that bearish bias, but getting below that 100-hour moving average and staying below that level would be step one. After that, we'd probably look toward this swing area right through here between 137.76 and 137.91, and below that we'll look for the rising 200-hour moving average and the 200-day moving average. So those are the green lines in this chart right here. Those would be other targets to get to and through to increase the bearish bias. Absent that, and the buyers still remain in control. Now on the top side, can't call it like we're running away. The high price from yesterday, high prices from yesterday took out the high prices from last week, but only by about 17 pips before the market rotated to the downside, both here and here. That was a disappointment on the break for each of those times. In trading here today, we did try to hold resistance against that old high here ahead of the highs from yesterday, but have been able to move above that level in the current hourly bar. So the buyers are making a play, and they need to get above the 138.90 level to increase the bullish bias. Let's take a look at the daily chart to see where that would take us. And if looking at the daily chart here, what we see is some good positive signs from the daily chart is that the price has been able to stay above this swing area right through here. That swing area is defined by levels going all the way back to this day right here, and then it became a support and resistance. So swinging up and down through here, then became a ceiling through here, and then became a floor through here, and a floor here, a floor here, before breaking below the floor and becoming a ceiling through here. You get the picture here from a technical perspective. It's clear. Below it is more bearish, above it is more bullish. Below it is more bearish. We're now above it, and so we're trying to see the price move to the upside here, and if it continues that trend, we would look toward the 50% retracement as the next key target. That level comes in at 139.574. I've been talking about that over the last few trading days, and that story line remains the same. Above the 138.13.9 level, if we move below that level, we have to get below the 137.49 level to increase the bearish bias, and then the 200-day moving average, so on and so forth. So buyers are trying to make a play here, holding its support against the 100-hour moving average, and looking to make a play toward the 50% retracement. My name is Greg McCloskey. Good fortune with your trading. Bye-bye.